Welcome to The Explainer. We're here to break down complex topics. And today, we're diving into the rules of life insurance in New York using slides straight from the source material to guide us.
So, you're thinking about buying life insurance in New York. Well, it's really important to know that you're not just buying a product. You're actually entering into a legal contract, and the good news is there are specific rules in place designed to protect you. Today, we're going to walk through that whole journey together, from the application all the way to long-term security, and we'll highlight the key legal protections that every single New Yorker should know about.
All right, let's start right at the beginning. Your life insurance journey kicks off with the application. And this is the part where honesty isn't just the best policy, it's literally the legal foundation of your entire contract.
When you're filling out that application, all those statements you make about your health, your history, all of it, are legally called representations. Now, the key phrase to remember here is to the best of the applicant's knowledge. Basically, you have to be truthful, of course, but you're not expected to be a mind reader or know about a medical condition your doctor hasn't even told you about.
Now, this is where things get really interesting. Making a simple, honest mistake on your application, usually not a deal breaker, but a misrepresentation, that's a whole other story. A misrepresentation is a false statement that's considered material. So what does material even mean? It means the information was so important that the insurance company would have flat out refused to give you the policy if they'd known the truth. You know, like not mentioning a serious heart condition you were just diagnosed with. That's the kind of thing that can make or break whether a claim gets paid down the road.
And then, you've got statements that are held to an even higher standard. These are called warranties. So, while a representation is something you believe is true, a warranty is an absolute, rock-solid promise that something is true. It's not just a statement. It becomes a core, guaranteed part of the contract itself. This example with a bank just illustrates it perfectly. The bank didn't just say it had a guard, it warranted it. So when that guard stepped out for lunch, that promise, that warranty, was broken, and that changed the insurer's risk in a big way. The very same idea applies to your life insurance. If you breach a warranty, the insurer could have grounds to deny a claim.
Okay, let's switch gears. Let's talk about who you can actually get a policy on. You see, you can't just buy a life insurance policy on a random person. New York law is very clear. You must have something called an insurable interest.
And this rule is absolutely fundamental. It's there to make sure life insurance is used for what it's meant for, protecting against a real, genuine loss and not as some kind of lottery ticket on someone's life. It really boils down to two things. You either have an emotional connection, like with family, or a legitimate financial reason for that person to stay alive.
So who has this insurable interest? Well, as you can see, the law says it automatically exists in a lot of common relationships. You have an unlimited interest in your own life, obviously. Same goes for spouses and for parents and kids with each other. It also covers business situations, like a company insuring a vital employee or even a creditor insuring a debtor for the amount they're owed.
This question comes up a lot. And the answer is yes, you can. But to prevent any kind of misuse, New York has put very specific rules in place that limit just how much coverage you can buy on a minor.
This table lays out those protective limits really clearly. For a young child, under 4.5 years old, the max coverage is either $50,000 or 25% of the life insurance the applicant has on themselves, whichever is more. For older kids, up to 14.5, that percentage jumps to 50%. You see how it's structured? It makes sure the coverage is proportional and is truly for protection, not for speculation.
Okay, so you've made it through the application. You've established insurable interest. Now what? Well, before you sign anything, New York law steps in again to make sure you have all the information you need to make a really smart choice.
Think of this as your consumer rights toolkit. First, you have to get a buyer's guide. Then, when the policy is delivered, you get a detailed summary. And here's the best part. You get a 10-day free look period. This is huge. You can take the policy home, read every word, and if you change your mind for any reason at all, you can return it for a full refund. No harm, no foul.
And I want to be clear, this policy summary is not some glossy sales brochure. It is a legally required document that lays out all the hard numbers for you. The exact premium you'll pay, the guaranteed death benefit, the cash values you can expect on the line, and even the interest rate if you ever need to take out a policy loan. It's all about transparency.
And that idea of transparency extends to advertising too. New York law is super strict about this. Ads can't mislead you, period. Not directly and not by what they imply. The whole point is to prevent deception and make sure you're making your decisions based on facts, not some over-the-top promises. So what happens after you have the policy in hand?
Do the protections stop? Absolutely not. New York has some really important safeguards in place for you as a long-term policyholder. This is a big one, especially if you get life insurance through your job. If you leave that job for any reason, you get a 31-day window to convert that group coverage into your own individual policy. And here's the magic part. You don't have to prove you're insurable. That means even if your health has gotten worse, you can still keep your coverage. That's a huge protection.
Now for the big what-if question. What if your insurance company goes out of business? That's a scary thought, right? Well, there's a safety net. It's called the Life Insurance Company Guarantee Corporation of New York, and it was created for this exact situation.
And this isn't just a token amount of protection. If your insurer fails, this fund covers your policy's death benefit all the way up to $500,000 for each policyholder. That's a pretty significant safety net.
But here's a fascinating little twist. It is completely illegal for an insurance agent or an advertisement to use this guarantee corporation as a selling point. And the reason why makes a lot of sense. The law doesn't want insurance companies to be reckless, thinking this fund will just bail them out. It forces you to choose an insurer based on its own financial strength, not on the promise of a backup plan.
So when you put it all together, from the honesty you need on the application, to your right to get clear info, to the safety nets that protect you for decades, you see these rules are here for a reason. Knowing this stuff transforms you from just a buyer into an informed consumer, someone who can navigate this whole process with confidence. Because at the end of the day, it's not just about buying a policy, it's about securing a promise that's protected.